Welcome back to the channel, everybody. My name is Artie with CoinCasso, and in this episode, we're going to get into the top cryptocurrency news articles that happened over the weekend to see if we can see some correlation as to why the price of Bitcoin and all other cryptocurrencies dropped over Saturday and Sunday. So if you're into the crypto news, this is going to be your number one resource. Let's not waste anybody's time, jump right into the computer and check out this first article. It's titled, Bitcoin and Ether Prices Stagnate as Traders Take the Wait and See Approach. After staging a recovery earlier this week, cryptocurrencies were stuck in a holding pattern Friday afternoon. Bitcoin and Ether both had climbed less than 1%. Notable performers on CoinDesk's big board include XRP up 10%, and XLM in the green at 3%, and Dash up 4%. All 24-hour price changes from 4 o'clock Eastern Standard Time. It also states traditional markets meanwhile continue to reel from the record unemployment claims in the U.S., part of the fallout from the outbreak. Despite the $2 trillion stimulus package making its way to Donald Trump for his signature. U.S. stocks closed with the S&P 500 index down 3% earlier in the day. Basically, what this article is talking about generally is the resistance levels of cryptocurrencies, those $3,000, $4,000, $5,000, $6,000 marks, and how when they don't surpass them for a certain amount of time, they actually hit a resistance plateau where they just stick around at the same price for quite a bit of time. Now, I want to show you exactly what they're talking about. During this entire 3-4 day period, it was literally just trading sideways between 6,600 and 6,800. And in my opinion, because it wasn't going up anymore, people began to sell off starting on Saturday, causing the prices to drop down between the $6,000 and $6,200 mark, with a low actually below the $6,000 resistance point, down to $5,800. Really interesting article, guys. It gets into a lot of statistics. Go give it a read. Let's jump right into the next article, which is titled Bear Market Over? Charts on Bitcoin and ASX 200 suggest otherwise. It states here that some financial publications around the world are touting the shortest bear run in history for US equities, as if the dark days of the virus sell-off are behind us. Markets in the US are beginning to show signs of life thanks to the US Federal Reserve's $2 trillion stimulus package. The Dow Jones Industrial Average is up 23%, and the S&P 500 index has gained around 20% from their respective March 23rd bottoms. Yet a conclusion to the wide-reaching COVID-19 pandemic is far from over. You can see right here what they're talking about in the S&P 500's chart, with their peak at $3,300, dropping all the way down to $2,200 in the span of a few weeks. Now, normal recessions and economic collapses would actually show a slow and steady increase over the next few years, whereas here we're getting right back up to almost 20% gains from where we were at the bottom. This is what they call the bear market when it's going down, and this theoretically should be their bull run that they're expecting to see. Unfortunately, in my opinion, I feel like this is just people buying the stocks because they think they're on sale, causing it to artificially shoot up a little bit, but then we should see another downward trend because the pandemic crisis is not over. This article gets deep into the statistics of all these Bitcoins, how they're trending, as well as the correlation between the S&P 500. Give it a read. It's a lot of technical analysis, but it's very informative. And the last article I want to talk about today is one in regards to businesses during this whole crisis. Now, I'm not talking about retail shops, I'm talking about a supplier that makes mining rigs. In this article, it states Riot Blockchain says coronavirus outbreak might hurt crypto mining farms. The NASDAQ-listed rig builder revealed its concerns in its annual 10K report with the Securities and Exchange Commission filed Wednesday. Such reports always include a general risk sections detailing worst-case business scenarios. This year, Riot added 2 pandemic-specific subsections to discuss COVID-19. Riot Blockchain is getting thrashed by the response to COVID-19. its workers being quarantined and going into self-isolation while its supply chain is seized up under border restrictions and factory closures. It also has the unwanted label of being a non-essential business like a grocery store. According to their 10K report, Riot has not been classified as an essential business of any of the jurisdictions that have decided to issue that date. That potentially cuts off access to Riot's offices and mining rigs. Now we're seeing this all across the board. Normal businesses that export their products across borders are getting so traumatized because their product can't get out to their buyers, so they need to shut down manufacturing, causing everything to be at a stalemate right now. Really interesting article, guys. Definitely give it a read. Those are my top picks for the articles written over the weekend. I hope you guys enjoyed this video. I hope you got some value out of it. I hope you got some knowledge out of it. Please don't forget to like the Facebook page, subscribe to the YouTube channel, and we will see you in tomorrow's video.